Hi, I'm Kerry Grinkmeyer, the host of Best of Us Investors. I want to make something really clear here. What I do is inform, I try to educate based on my experience, but what I'm doing is managing my portfolio. And I don't want to give anyone the impression I'm telling you how to invest your money. You've got to tell yourself how to invest your money. All I'm doing is sharing my experience and my knowledge to help you potentially become a better investor. So don't take everything as gospel because I don't know. Nothing is chiseled in stone. I merely react to what I see happening. And as the thumbnail said, I liquidated my Tesla stock this morning at $795 a share. I own no more. Why? And it is purely because I believe that Tesla represented my highest exposure to China. I believe that China's economy is going to explode as a result of the real estate crisis that is happening. Evergrande even is today. It has been taken off the Hong Kong market. They're not trading it because it's going to go bankrupt. Well, that's going to have an effect on the Chinese population. It's going to have an effect on the world's economy. So my largest exposure to that is Tesla. And I don't believe the Chinese are going to be buying as many Teslas as Tesla might have thought they were going to be buying over the next 3 to 5 years. So that's why I did that. Do I believe that Tesla is going to be the largest electric vehicle stock in the future? Yeah, I do. I don't know. I have little doubt of it. Do I believe it's a wonderful technology and battery company? Yeah, I do. But you look at its valuations, and a lot of that valuation is based on the growing China population. Well, the growing China population just discounted their homes by 25 to 50% as a result of the Evergrande and other developers over there. And so it's a turmoil. Why would I want to sit back and say, well, I'll just write it out? I'm not going to do it. So I liquidated my Tesla. Why? Potentially to buy it at a cheaper price. I sold it at $795. I hope to buy it back at $600. So that's why I did that. Now, at the same token, I think that we need to recognize, if we'll learn from history, that our markets are driven by events. And those events go all the way back to the introduction of the internet, the introduction of social media, the introduction of Google and search. And if you look at those events and then say, okay, that was technological disruption. This is what Kathy Woods tells us we need to be watching for. Then we just need to figure out what the next events are, and if there are any bubbles or bumps in the road that are going to give us buying opportunities as the market pulls back. That's where I think we are now. And I want to explain that to you and share the tools that I use to help me make what I believe to be are better investment decisions for Kerry. I then invite you, if you would like to share your knowledge with me, to join our tribe. I just believe that if I have the help of other people, I can be more successful. If I can tap into other people's minds and their past experiences and pool them with my mind and my past experience, I think I can do better. So that's what this channel's all about. I'm not here to tell you how to invest your money. That's why you have your brain. But I'm willing to share mine. So let me, again, just emphasize to protect my butt that I'm not your financial advisor. So don't sue me if I'm wrong. I'll be right back.
Best of Us Investors presents Kerry Grinkmeyer.
I've developed a tool that I'm I constantly go back to. It's on tradingviews.com. And if you want access to tradingviews.com, you can get a discount on it down in the description, amongst other things, such as books that I think you need to read and books you need to read. But I want to show you this chart that I've put together, and I would strongly suggest that when it's up there, you stop your computer and you take a screenshot, and then you print this chart and you hang it on the wall next to your computer so that you can constantly remind yourself what drives the stock market. It's events and it's liquidity. If a good thing comes along and there isn't liquidity, there isn't money to buy into it, it isn't going anywhere. If there's a better investment somewhere else, it's going to go there. So you need to constantly be aware, what are the events, positive and negative, and most of them in the past have been very positive, and where should I put my money? So let's look at that chart and see if you can't come to a better understanding of where your money should be going now. This is the chart that I use. I created it on TradingViews, and it kind of gives me an anchor to understand where the market is and where it's going, and more importantly, where it's been and how it got there. I believe the market is driven by events, and I have created a series of events shown here in red, starting with the introduction of the internet and bringing us all the way up to here and where I think we're going as a result of the healthcare revolution. I also operate under the thesis that the market requires liquidity. And the liquidity since 1990 has come in part from the federal government and its debt. In 1990, as you can see, its debt was $3.2 trillion, and it pretty well was leveled until 2000, and where it basically went up from 3.2 to $4 trillion. Not based on today's numbers, not an outstanding growth rate. But then the market got out of whack. And as you can see, the dot-com bubble pushed it substantially higher than the line for the debt, and we had a crisis, and you can see it dropped substantially. This was a change in monetary policy. This was the time when governments around the nation said we need to step in and we need to provide liquidity to turn our economy around. And you can see this is what has happened over the last, 21 years. And our debt continued to climb until we had another crisis, the subprime crisis, and then we increased our debt even at a more rapid rate, at a rate of roughly $1 trillion a year. And that took us to 2020, when we were at 20 trillion, and we had the subprime crisis, and then the printing presses just went wild, and we added $8 trillion in roughly 1 year. So our chart for our line for our debt has gone off the chart. Now, though, some things have come into play that are putting all of this in jeopardy. If, in fact, we had not had some events that would have turned, that are now going to turn the market down, and we're going to see a correction. That is going to be the China real estate bubble, the broken supply chain, which has become evident as a result of the coronavirus, which is going to lead to inflation, and that's going to lead to higher interest rates. That happening, those events, is going to stall out our healthcare revolution. It will happen, but it won't happen as fast as the attention of the markets look towards China. China is the perfect storm. It has broken our supply chain. We, as I talked about in prior videos, we can't get cars, we can't get toasters, we can't get backpacks, and we're going to pay. And as you can see, as a result of that, the market has in fact dropped over the last week, week and a half. My contention is until we know where this line is going, that blue line, and right now that's tied up in Congress and the White House. The White House is asking for another $5 trillion. If in fact that happens, we could turn this red line into a green line and head it and turn it up. But I don't think it's going to happen anytime in this year. The other thing that confirms that to me is this green dotted line. That was the money we were spending on the Afghan war. Joe has recognized we had to get out of the Afghan war in order to free up the $2.3 trillion that we had spent over the last 20 years, which amounts to about $115 million that's in the budget now that he needs to correct the supply chain problem. We're calling it infrastructure, but what it is our national security is in a higher jeopardy than it has ever been in our history. So what do we need to do about that as an investor? No, what am I going to do about it? Because this channel, as I have said, is not your guide for how to invest. This is how I invest my money, and then you can make your own decisions as to how to invest your money. Let me explain to you where I'm going with it. Okay, again, as I said, take a screenshot of it, paste it next to post it next to your computer, and focus on it. It's going to give you some guidance. Again, I have, for the last probably 5 videos I've made, indicated that I think we are in for a pullback. How much that pullback is, I don't know. I liquidated some of my big six about a week ago and went to about $200,000 worth of cash. And then, as I said just this morning, I liquidated another $50,000 worth of Tesla. So I now have about $250,000 sitting on the sideline, and I'm evaluating my capital gains and my capital losses. I've got some opportunities now to sell some things at a loss to offset some of the gains in some other stocks that I have that will open up an opportunity in my non-qualified account to do some liquidation. So I'm looking at that as well. Why am I doing that? Because I believe there's going to be a better buying opportunity in some of the stocks that I think are going to carry us forward. Again, I like to invest in stocks that are going to change the way I live. What are the things that are going to change the way I live? It's, again, the red events. The biggest red event in my life was the coronavirus. It has shown that our healthcare system is broken. We had a virus that came out of Wuhan, China, that just swept across our nation with nothing to stop it, with no notification, and it brought us to our knees. Well, that can't happen again. So we got to change our healthcare system. So that's where I want to invest because I know it's going to change. And if you look at my portfolio, you can see I believe in biotech. I have bought the biotech stocks that I think are going to change our life, both as a use of artificial intelligence comes into the medical field, and secondly, and most importantly, as CRISPR, a total new therapy, comes into our world, and we don't try to treat diseases anymore, we try to cure them. So I invest there. The other big red event and it goes back to the coronavirus as well, is our supply chain is broken. These are two undeniable things. Our healthcare system is broken and our supply chain is broken. And as a result of both of those broken things, our national security is in jeopardy. And this is why Joe is screaming for $5 trillion, and that's why I'm screaming, Joe, that's not enough. $5 trillion isn't going to get it done. We've got to totally rebuild our manufacturing facilities. We've got to totally revolutionize our healthcare system. $5 trillion isn't enough, Joe. So I look at these things and say, until the nation wakes up that China's going to explode and our healthcare system and our supply chain is broken, we're in for a dip. So I'm preparing to buy into that dip. That's why I'm selling. So that's what I'm doing. What you do is totally up to you. The other thing I want to emphasize here is this video I do is for your benefit. If you don't like it, please go away. Don't come into my comments, because I try to read every comment and give me a series of stone throwings. And if you don't like what I have to say, hit the goodbye button, okay? But don't badger me and those of us who else. And then a message to YouTube: get rid of these bots that are plaguing your channel. This is your space. You should control it. Get rid of those bots so that those of us who want to use your vehicle, YouTube, can do it in the comfort and not have to deal with bots. Okay, got everything off my chest today, but I want to ask one more thing. I need your help, and that is, this is a bigger game than Kerry's accustomed to playing in, and he's sharing his mind. I want you to share your mind, and you can do that at Best of Us Investors and join our tribe. Our tribe is a group of people who have chosen to work together to make good investment decisions. Okay, I'll talk to you again tomorrow.